What to happen? Speaking of block deals, just lastly, Patanjali might also be a stock in focus today because of the block deal. But as Samina highlighted before, the potential good news for everyone in terms of consumers is that there could be a cut in petrol and diesel retail prices, which have remained unchanged since March 2024 and fixed for the last 28 months. This possibility comes in after the commentary from Oil Secretary Mihika. What has the Oil Secretary said? More importantly, what is the impact on the related stocks?
Good morning, Neeraj. So Pankaj Jain, the Oil Secretary, has stated at a recent event that fuel companies may consider cutting and reducing retail fuel prices if the global crude or oil prices remain on the lower end for an extended period. He also said that India is also seeking higher OPEC output and maximizing their cost-effective crude purchases from Russia. Now, just context for the viewers, crude prices are down 16% since July of 2024 itself. They also dropped to a 33-month low earlier this week. Now, lower crude prices are positive for IOCL, BPCL and HPCL as it helps their marketing margins. Now, the government may cut diesel prices in the range of 2 to 3 rupees per litre, and the reason have been the lower crude prices and OMC is experiencing higher marketing margins because of that. When we talk about when the fuel rate cuts could come in place, well, according to Emkay, they expect retail prices amid the upcoming state elections, the prices to be cut only towards Diwali before Maharashtra's election model code of conduct. And when you talk about how the impact on the oil companies are, where they're seeing strong marketing margins currently. Now in Q1, the petrol and diesel marketing margins ranged were at 5 and 4 rupees per litre. July and August, we saw an increase of this, and September was when the companies have been experiencing supernormal marketing margins because of the lower oil prices. Petrol marketing margins at 15 rupees per litre, diesel at 13. So the Q2 expectations are also healthy at 10 rupees per litre for petrol and 8 rupees per litre for diesel. And lastly, I'd like to end with, even though Brent prices have recovered from the 33-month low, they're currently trading at $72 per barrel. Emkay believes that the company could still yield 5 to 7 rupees per litre of margins in Q2 FY25, even if Brent or oil prices average at $75 per barrel, and even if margins get impacted by the potential price cut due to the fuel rate cuts.
Well, let's see. It's a sector that fundamentally should benefit, but the price action, a clear indication that the street is in no mood to give a thumbs up to the oil marketing companies as yet. So let's see if today is a different day or does it remain the same. Well, a small shift towards the macros, because that's important too before we shift back to the micros. Rising vegetable prices continue to drive retail inflation higher. August data shows that CPI inflation has surged to 3.65%. Pallavi Nahata joins in now with the details. Pallavi, what are internals looking like?